Safe to say that the US equity markets have made an epic recovery over the past year, and it's something that many people really didn't expect while we were in the midst of those record declines at the beginning of the pandemic. Even the most bullish investors, I think, would have been at a push to be thinking that we'd be seeing all-time highs again while still actually in the pandemic, not even out of it yet. However, over the pond here in the UK, the FTSE 100 hasn't seen the same level of success. Although recently, as you can see on the chart here, this is the daily chart, you can see that there has been a bit of bullish momentum starting to kick in. But if we look at the bottom, back in March 2020 over here, if I can find my mouse, there we go, over here. If we look at the bottom all the way to the peak, that's just over a 40% increase. Now, that's obviously a great comeback, but it actually lags behind quite a bit when compared to the S&P. Now, there are obviously a number of reasons for this. One of the main things was Brexit, which over the past 4 years, and especially towards the end of last year, was anything but plain sailing. Then, of course, there's the pandemic. The UK was one of the hardest hit countries, with new cases increasing at a relatively high rate back in September and October, and then again in December and early January. So the death rate in the UK has also been very high, and it's taken full lockdowns to reduce new infections, meaning that the economic recovery has always been at the mercy of a successful vaccine rollout. However, this is where the tide starts to turn for the UK, because although there are still economic impacts from Brexit, the government managed to negotiate a trade deal, and that sort of alleviated some of the uncertainty. And the vaccine rollout has been something that they seem to be getting very right, with one of the most successful rollouts in the world. Now, by some valuation measures, the FTSE 100 is also starting to look more appealing than the S&P 500. However, the FTSE obviously lacks that sort of tech heavyweight that the sort of companies that dominate the S&P, companies that fared well during the pandemic. In fact, just a side note, the FTSE's total value is lower than just Apple. Okay, so that just puts things in perspective. So the index is seen more as representing the old economy, with world exposure to mining, oil, banking, which should all benefit as the global economy starts to reopen more and more. Now, that doesn't necessarily mean that the FTSE is about to skyrocket, but money managers have currently been underweight UK stocks, and if they start seeing UK stocks as being undervalued and begin increasing the percentage of their holding in portfolios, we could start to see it actually outperform. Now, if we look at individual sectors, those in the FTSE are actually relatively undervalued compared to the S&P counterparts, so there are opportunities there. Now, in terms of the technicals, we've been seeing structure staying bullish, even though there are these big dips in the waves. We're still getting higher highs, higher lows, there's still progress. And in fact, these deeper waves that we're seeing here than some of the other indexes around the world could give opportunities for buying the pullbacks and getting decent prices. So I'd say as long as the global economy continues to recover from this latest downturn, the UK gets out of lockdown, which should be happening over the coming weeks, then UK markets may be able to have more of a sustained comeback and break that early January high that we've got over there, en route to maybe fading more of that 2020 sell-off. Let's see what happens. I'd love to hear your thoughts in the comments. Let me know down there. If you like this video and you want more topics about the UK markets, then hit that thumbs up button. Let me know. Thanks for watching.